The cryptocurrency market often reacts to political shifts, with major election outcomes playing a significant role in shaping investor sentiment and market trends. If former President Donald Trump were to win an election, analysts speculate a range of potential impacts on the crypto market, largely due to his past stances on financial regulation, trade policies, and stance on U.S. economic growth. Here's an analysis of the possible outcomes. 1. Regulatory impact. Under a Trump administration, regulatory actions on cryptocurrencies may tighten or loosen, depending on broader financial strategy shifts. Trump's previous administration was not particularly favorable towards cryptocurrencies, with Trump himself expressing doubts. However, his administration focused more on economic growth, which included deregulation in some areas. A potential return could see an unpredictable regulatory stance on digital assets, possibly creating a volatile environment until clearer policies are established. 2. Economic policies and inflation control. Trump's economic policies often emphasized national interests, economic stimulus, and lower taxes. If he pursues a similar approach, there could be an inflationary impact, potentially influencing cryptocurrency as a hedge asset. Historically, investors have looked to Bitcoin and other cryptocurrencies as alternative assets during inflationary periods, boosting demand and potentially driving prices upward. 3. Global trade and foreign relations. Trump's firm stance on trade, particularly with countries like China, could impact global markets. Stricter international trade policies may increase market uncertainty, leading some investors to move assets into the more decentralized crypto market. A re-escalation of trade tensions could increase the appeal of cryptocurrencies as a borderless financial asset, less tied to traditional economic policies. Market sentiment and volatility. Political shifts often bring short-term volatility in markets. In the case of a Trump win, the crypto market could see initial price swings as investors react to new policy announcements and anticipate potential changes. Markets may react positively if investors foresee deregulation in favor of crypto, or negatively if there's an expected crackdown. Institutional interest and adoption. Trump's focus on growth and big business could encourage more institutional investment in crypto. In recent years, institutional interest in digital assets has risen, and under a Trump administration focused on financial innovation, this trend might continue, providing more legitimacy to crypto assets. Potential for a CBDC. During Trump's previous term, there was limited focus on a U.S. central bank digital currency, CBDC. However, with the Federal Reserve showing increasing interest in digital currencies, a Trump administration might push forward with a U.S. CBDC to maintain financial dominance globally. A government-backed digital dollar could impact crypto adoption, with some investors favoring traditional digital assets for security and compliance. In conclusion, a Trump victory could bring a mixed impact on the crypto market. While there may be temporary volatility, the long-term implications will likely depend on how policies shape investor confidence, regulatory actions, and economic conditions. For investors, staying informed about policy changes and regulatory discussions will be crucial to navigating the crypto landscape during this period.